Hey guys, welcome back to the channel. Crystal here, CPA and co-founder of Life Accounting. Today, I'll be going over the top 5 write-offs you could be taking in your LLC this year and next year and the year after that, all to save you the most on your taxes. Are you ready? Let's get started. There are over 20 million LLCs in the US today, and chances are if you're watching this video, you already have an LLC or at least thinking about starting one of your own. In either case, you want to make sure you're aware of the tax write-offs or deductions you could take to minimize your tax liability or even maximize your refund. The first write-off I'm going to discuss is the home office deduction. This has to be one of my favorite write-offs because it can apply to almost everyone, and it allows you to write off normally personal expenses as business expenses. If you have a dedicated room or space in your home that is strictly for business, you can take the home office deduction. Most small business owners run their business from their home anyways, and considering the worldwide pandemic we experience and are currently experiencing, a lot of us entrepreneurs were forced to work from home. So here's how it works. First, you would need to figure out the square footage of your home office or space. Then you would divide that by the total square footage of your entire home. This would give you the business percentage use of your home. You can then write off that business percentage of your rent, mortgage interest, utilities, insurance, real estate taxes, repairs, maintenance. The list goes on and on. So for example, let's say your home office or space is 150 square feet and your entire home is 1,500 square feet. 150 divided by 1,500 is 10%. So now you can deduct 10% of your rent, your utilities, and all of the other expenses that I mentioned. Side note, notice how I've been mentioning it as a home office or space. You don't necessarily need an entire room in your house to take this deduction. It just has to be a dedicated workspace. So if that's a desk and a chair in the corner of your living room, that can work if that area is regularly used and worked in for business. The second write-off I'm going to discuss is startup and organizational costs. When you first start your LLC, there's a pretty good chance you had some initial investment costs in things like computers, equipment, research and development. Maybe you paid a consultant or a lawyer. You probably had some state filing fees you had to pay, right? You're able to deduct up to $5,000 in startup costs in the first year you open your business. Now let's assume that you spent more than $5,000 because that can easily happen. You can write off the first $5,000 in year 1 and amortize the cost above $5,000 over 180 months. So those costs are not completely wasted and will benefit you on your taxes over the years to come. The third write-off is your cell phone expenses. So if you're anything like me, I do a lot of my business on my cell phone, probably more business than personal. This creates the opportunity to not only write off the purchase of your cell phone, which we know can easily be over $1,000, but also the monthly service of that cell phone. But similar to the home office deduction, you can only write off the business use of your cell phone. So if 80% of the usage of your cell phone is for business purposes, you can only write off 80% of the cell phone and monthly service on your tax return. The fourth write-off is vehicle expenses. This is a big one that a lot of business owners miss or just don't take advantage of. I'm always reminding my clients about this deduction and they're like, oh yeah, I did use my car for business last year. When you use your vehicle for business purposes, there are 2 ways you can write off the expenses. You can write off the mileage or you can write off the actual expenses of the vehicle. Let me explain. With the mileage approach, you can write off 56 cents per mile in 2021 for every business mile you drive. This rate changes every single year, so it's important to keep up with what the business mileage rate is year over year, though it doesn't fluctuate too much higher or lower than the current rate. With the actual vehicle expense write-off, you can deduct expenses like gas, tires, insurance, repairs, and lease payments. If you use your vehicle for both personal and business, these expenses must be split based on the number of miles for business and the total amount of miles driven. From what I've seen, in some cases, it's better to take the actual expenses, and in other cases, the standard mileage rate is more beneficial. The bottom line is you should be keeping track of your business miles and your overall mileage for the year and your vehicle expenses. This is a huge deduction and can literally save you thousands of dollars. Business owners miss this one time and time again, so I'm hoping you won't be one of them. The fifth and final write-off is retirement. Okay, so I hope that each and every one of you are saving for retirement. As a business owner, you're kind of out on your own when it comes to retirement, but that's not necessarily a bad thing. You just have to know what your options are. There's SEP IRAs, solo 401ks, and simple IRAs that can be used as tax deductions and retirement planning tools. So let's say you go with the SEP IRA. You can deduct up to 25% of your self-employment earnings that is put away for retirement. Solo 401ks is similar, but you can't have any employees in your business to establish this retirement account. Solo 401ks also allow you to contribute more in a given year, which would increase your write-offs. We have some really good videos on our channel that take a deeper dive into retirement accounts for business owners, so be sure to check those out as well. You know what? I'm gonna give you guys a bonus tip that will save you thousands of dollars in taxes. But you have to do me a favor and subscribe to our channel if you haven't already. Give this video a thumbs up, and hey, while you're at it, comment down below what your favorite write-off is from today's video. Okay, did you do that? Great. So the bonus tip is getting S Corp status. Once your LLC is growing, making money, it's your sole source of income, it can be greatly beneficial to be taxed as an S corporation. This will save you 15.3% in self-employment taxes. As an LLC taxed as an S corporation, you do have to pay yourself, the business owner, a reasonable compensation, and self-employment tax is calculated and paid based off of that amount. But any profit above your compensation is not subject to self-employment tax. Plus, you can write off your compensation from your business income. This creates huge tax savings, and not enough LLC owners are doing this. You know, one of the benefits of having an LLC is deciding how you want to be taxed. You can be taxed as a sole proprietor, which is usually the default and results in a lot of self-employment taxes. You can also be taxed as a S corporation or even a C corporation as well. Electing to be taxed as an S corporation is not exactly a tax write-off, but it is a tax planning strategy. As your LLC starts earning $50,000, $60,000, and $70,000 and beyond, it is extremely wise to start considering the other options in how you want to be taxed. All right, there you have it. I hope you guys enjoyed this video and will start implementing some of these tax write-offs in your LLC this year. If you have any questions, please comment them down below and I will answer them. See you in the next video.